Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome back to the channel. For those of you who are new, this is the Liquidity Trader channel. Okay, so again, what we do here a lot is we cover all things market profile. So if this is your first time here, you're going to find that I'm talking a lot about market profile, time price opportunity charts. And look, if you don't know what that is, I can safely tell you're in trouble. However, I've got a ton of stuff completely free on my YouTube channel that you can go through and you can review and you can bring yourself up to speed as a trader. Alright, so for those of you who were here for my last video, we did a massive educational, I should say, explanation of how to trade liquidity using market profile, how to trade with market profile, and how this stuff could turn your entire life around. I kid you not. Right now, for those of you who have been following other people on this platform that are telling you all kinds of BS, and you're looking at this channel and you're thinking this is one of those channels, well, I can assure you it is not. That is not what we do here. There are no talking heads. If you come to this channel, you are seeing my screen and I'm showing you what to do. And I'm not an influencer. I don't have a TikTok account. I don't have an Instagram. I don't want your Cash App, right? All I'm trying to do here is help you guys get where you need to get in this business. Now, for those of you who don't know me, I have a mentorship program completely free on this YouTube channel, which teaches you everything from A to Z. Now, if you go through the mentorship program, I have no doubt in my mind that you are going to be a profitable trader. Full stop. There's no ifs, no buts. Just go through the mentorship channel, and there you'll be able to see my own performance, which I put up on the very first introduction video for the mentorships, just so you know that I know what I'm talking about. I've been in this game for a long time. I've seen all kinds, all sorts, professed millionaires, and the one thing you're going to learn in the investing space is you never know who anyone is. You just don't know. You don't know where they're coming from. You don't know if it's all a fraud, it's all a con. You don't know. So the last thing you want to be doing, right, and this stuff would really mess with your psyche, is the last thing you want to be doing is beating up your mental state just so that you can put zeros on a balance sheet, right? You want to be able to be like those guys who say they're putting zeros on their P&L, right? And that's what you want to be. But you don't know where these guys are coming from. You don't know what their journey is like. And worst of all, you don't even know if those zeros are true, right? So you have to go on face value, right? In this business, a lot of the time, you have to go with what you see. And that's why I always say to people, when you come to this channel, I'm big on showing you how to do things, and then you can go away and you can try it yourself. You don't need to do it on a live trading account. You can do it on a demo. See if the stuff works. Don't just take my word for it. Don't just say that, well, this guy said this, right, so it all works. Don't just take my word for it. Go out there and physically do it yourself, right? And when you see that it works, you come back to me and tell me that, holy, this person, whoever they are, really knows what they're talking about. Anyway, guys, on to the video. So today we are looking at market profile. Now, in my previous videos, I know I covered a lot about liquidity using candlestick charts because I needed to be able to show you this. I know you guys love candlestick charts, you love Forex, and it's just such a difficult transition coming from what you're familiar with onto something that you're not familiar with. It can be a pretty tough transition. I respect that. So one step at a time. What I show you on market profile, I'm going to show you what it looks like on a candlestick chart so that you can see that it doesn't matter. It doesn't matter. You don't really need a TPO chart, but I will show you the edge that you will develop by using a TPO chart. I'll show you why. The most professional traders in the world, like guys from the CME, pit traders, everybody that you probably look up to as a new trader. And I hope that so many new traders are watching this because I will save you so much time. Listen, I will save you so much time. So I really do hope new traders listen to it. But if you're not new, again, the people you look up to, they use market profile. So you have to start to ask yourself, well, why shouldn't I be using it? Okay, so let's take a look now at what we're looking at. So again, I know you guys love Forex, right? So I'm going to use Forex as an example. I'm going to use cable as an example because I know you guys love Forex. If I had like an equity chart up here, or I had like a crude oil chart, you guys are clicking out, right? And you won't learn anything if you do that, so stick around. Right, so in the last video, so let's just pop over here briefly. So in the last video, we looked at a candlestick chart and specifically we spoke about liquidity, right? So again, I explained the concept of stops. So now you're looking at that chart now. Or every single thing that we said will happen, happened, right? So the first thing is that we said on the 24th, we traded short-term liquidity. We were going to go lower. It wasn't worth entering the market pre a US session because what you want to be able to see is those stops being hunted. So you want to be able to see that liquidity taken down. And where did we say the potential liquidity areas are? So we already mapped that out. So we had a liquidity area here, but just simply because of the time of day, it didn't make sense. We were trading into the New York Open, into the NASDAQ, so we needed to see a liquidity clear before we respond. So again, whenever we are looking to get into a position, we want to be able to see those stops hunted and a re-enter. Now, where did we see that happen? That was down here, right? That was down here. That was where we saw it happen. Market traded in. This is 4 p.m. So that's about the FTSE close. And then we based out and then we recovered in. That's your cue to sit long. Risk can go either of these levels. Where would be our next place? Where do things go from here? Well, the next liquidity area with this big drop is actually up here, right? So we would expect that that's what we're going to face. That's where sellers are going to be in abundance. Again, you can see we had another liquidity area just up here and we already marked that out. So anywhere between 27.65 and 86, we could get a reaction. Now we don't want to front run this stuff. So we don't want to be saying that, well, it's going into that liquidity area, so therefore I'm going to start to sell immediately, right? Because I want the best possible price. I'm so greedy. My handle here is Greedy Trader, and it's a parody, right? Because so many traders are so greedy and they talk so much BS. But in this business, you can't be greedy, right? You have to stick to the plan, basically. Stick to the plan. So you can see we go up, we trade liquidity, and we start to come a lot lower. Time matters, right? So when did we get this event? We were overextended in a European session. That was 9 a.m. You can clearly see that sweep initially down, back in, and then you can see another sweep to catch and people with tight stops again, and then we start to break lower. So if we were getting short at 11 a.m, which I always say to people, you don't want to get short at these times. It makes no sense. It's 10 a.m. all the biggest European traders are already in the trade. So if you're trying to get short there, be prepared for volatility. You don't know what's going to happen in the New York session. So we did get a small push lower, and then we had a sweep of those stops just to the highs, and then we finally broke lower. And look at the time that we broke lower. Let's break this up a little bit. Look at the time. It was 2 p.m., which is the Nasdaq hour, right? Nasdaq opens at 2:30 p.m. my time. In the US, that's the morning, and that's where we got the biggest liquidity. So that told us immediately that there was a short opportunity, and where we likely going to go. We are going to go into demand. Let's mark that out. So we're going to go into demand, right there. Why is it demand? Well, you can see the volume spike at 8 a.m., which was the London Open. So sessions and times matter, right? You just can't just come into this at any time. Sessions and times matter. So we ran into demand, right? We can see that from the volume. For those of you guys who've never ever encountered volume, I have a ton of stuff on the YouTube channel on volume, so check it out. So we go into demand, and what happens when we hit demand? We start to base up again, right? We start to rise, right? So if you were short, demand took us right into an Asia midnight session. Now, to be fair, you'd probably be asleep. I would be asleep, right? And which is why, if we're trading into these overnight, what do? We break even our trade. So let's say you were short at 27.54. This thing has grounded all the way down into demand at midnight. Then a simple thing to do is put your take profit there. If you're not going to put your take profit there, then at least break even your trade. And we've seen that into the wee hours of the Asia, well, the late hours of the Asia session and the wee hours of the European session, you can clearly see that the market now started to tick upwards as people cover those trades at the demand area. This is not rocket science, guys. It's happening consistently all the time. So what do we expect going to happen now? Well, it's really simple. It's really straightforward. Clearly, we've run into demand. We can see at this point we have a lot of volume trading here. We can neither say it's supply or demand because we're not trading at reasonable lows. We're closer to the high, so there's probably a lot of sell pressure there. What are we looking for? Well, we're either looking for a continuation to the downside, which takes us into new liquidity, which puts us here, or we're looking for a retest of the liquidity low. There's not enough volume there in my opinion, so I think that will easily break in a US session just because of the amount of sellers, and that will open up 26.48, right? So again, put that here. That's where we're going to find liquidity, right? So that's where the stops are going to be. We've said this time and time again. Why would stops be down here? Well, if you were going to get long the market, you're going to have to put a sell stop in as your stop loss, and then you're going to trail that along the way. Now, people who are looking for breakout trades are going to put their sell stop orders there to push them lower. So you're going to get a combination of stop loss orders, right? Some of these from slightly longer term traders who are going to hold on to these trades till they're completely wrong. Some of these are going to be from traders who are looking for breakout trades. All the BS talkers will always be telling you about trading the break and all kinds of nonsense. So you're going to get all of those, right? So that's going to create an abundance of stops. Now, if you look in a central order book, which is the whole point of orders, is they're in a central order book, you'll clearly be able to see where those orders are clustered. And what do big traders want to do with sell stop orders? Well, they want to hunt them all so they can become the buyers of those sells. That's it, right? Because they can get the most efficient prices at the bid. Simple as that, right? So if that is happening, then we're going to likely see those things triggered. We don't want to preempt it because remember, we have liquidity all the way down to the 126 handle. So if we drop lower in a US session, then that will grind the market down and we take out the liquidity down here, and then we'll be back on our way. We will have a new liquidity high, which will suggest that the market is taking a lot of sell pressure to the downside. So again, the chances of trading the liquidity highs at 127.86 starts to diminish. And that's what people describe as a consolidation. See, people, a lot of us, we use these terms, we don't understand what they actually mean or what's technically happening in the market that is leading to this kind of behavior. It's all about liquidity, guys. It's all about the stops. It's all about the orders. That's all there is to this business. So right now, if we move lower, that's what we expect. We don't care. We don't preempt in this. We don't care if it happens, it doesn't happen. We do not give a damn. As traders, we have no concern with predicting the future, where things are going to be irrelevant. Now, let's say this market moves higher. We have a liquidity highs sitting at 127.65 and 127.86. Now, we would expect that the market would trade there, take the liquidity there, and the moment we push lower, that exposes the downside liquidity of 127.03. And we will do this into perpetuity. The key to becoming successful is to be able to understand this and digest it really quickly in the same way I've just told it to you right now. You have to be able to see all of this stuff. So what can we see? I've already told you the volume here is nowhere. It's a bit of a churn. So if we break to the upside, we're going to get a really big move to the upside. And unless we can find liquidity can stump us lower, then we're probably going to keep going, right? And then we start to target much higher liquidity areas on much higher time frames. And that's how we want to continually look at things. Now, what do I mean by that? Take a step back. So we can clearly see on a weekly frame, we have liquidity all the way up to 132. Now, my guess is at some point we got to go up there and take the liquidity, which gives us an idea of the macro picture. That even if we're thinking about things from a macro level, so guys, into Elliott wave, and you will be able to see structure, right? Which is going to give you an idea that we're probably going to do a new high at some point when it comes to the pound. We can see there's a liquidity low at 120.73. But for us to go down there, we're going to need fundamental information. It's not just going to be like a small swing play. We're going to need fundamental information from the central bank or someone else who's going to be able to facilitate such a move that will prompt much larger traders to go for the liquidity down at 120.65, because that would suggest that those big traders are able to get much cheaper prices, which will discourage them from paying higher prices. And that's where something like market profile comes in. So you can see these things a little bit better. So if you have a market profile chart, you can see exactly what we were seeing. It's the same representation. You can see those liquidity grabbed at the upside. But what else do we see? We can clearly see that there was an offer stack and a value high sitting right up there. So it makes this even a more efficient place to be short. So you will be able to act with a lot more conviction. This is the kind of stuff you can't see, because this is a reflection of where there were passive orders before, and market profile has recorded the prints. As we look lower, what can we see down here? So that initial move that took us up, well, we could clearly see that we were trading into value low, right? We could clearly see that. So at this point, prices have become incredibly efficient because we're trading the lowest standard deviation of this particular profile. So it makes it more attractive. So again, the moment we went down, we took that liquidity. We had lots of opportunities to get long, because here, for example, we had what we call a value trade. So that the moment we start to creep up in sort of F period, right, which was pretty early, to be fair, it's about 2 a.m. in the morning, so you probably never get that trade. But the moment we start to creep up, it implied that we were going to get a value trade. So even if you were very late, you came in the London session about 7 a.m., you would have had a long, right? At least to trade the liquidity area. That's 42 ticks. 42 ticks. And that, for me, that will be a crazy late entry. That is not something I'm looking for. I'll be looking for the reaction down here. And of course, if I'm asleep, right, which is like, this, I think it was about 6 p.m. my time, so 8 p.m. in Europe, I wouldn't be awake, right? So I'll probably miss this trade, to be fair, but this would be my trade, right? Because we traded in the liquidity, and I'll be looking to cover in a demand, and then I'll be looking to see what happens in the New York session or the NASDAQ open or the Chicago, what a trader's going to do. So how are the futures guys going to react? How are the stock traders going to react? We're going to get these correlated flows, guys. These markets don't run in a sandbox. They're not in isolation. They play off each other. But either way, I would have covered into demand because I don't want to get hit with headwinds in the New York session. Right, so this is how we all have to start thinking about things. Anyway, guys, to my next video. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?